Good afternoon, everyone, and thank you for joining us for this London Climate Action Week event. It's great to see so much interest in sustainability assurance. My name's Helena. I'm director at Atveris, and I'm joined today by Victoria, one of Atveris's lead assurance managers. Over the next 30 minutes, it's a very quick webinar, we will be discussing how organizations can prepare for sustainability assurance, as well as the practical steps that support your assurance readiness and some of the common challenges that our clients face, as well as actions to ensure that your engagement runs smoothly. We will be covering 4 key areas today. We'll start by looking at the sustainability assurance landscape, some of the factors driving growing demand for assurance across both voluntary and regulatory reporting. We'll then discuss what sits behind trusted information with regards to sustainability. And of course, the focus there will be on governance, controls, evidence, and bringing that about that overall data quality. Next, we'll focus on putting assurance into practice. We'll share some practical considerations that organizations should be thinking about as they prepare for future assurance requirements. And finally, we'll close with some key takeaways before moving into Q&A. We should be leaving enough time for Q&A. And of course, it's recorded. We'll share all of the slides. If we don't manage to get to all of the questions at the end, we'll be more than happy to follow up directly. So keep that in mind. If you're posting as anonymous and we might run out of time, you may want to pop on your name so we can get back to you directly. Brilliant. So we can get started. Before we begin, a very quick introduction to Atveris. Our name is an anagram of the Latin word veritas, or truth, so very fitting for our mission as a specialist sustainability assurance firm. We are established by emissions accounting and sustainability reporting experts, and we focus on providing independent assurance across the range of sustainability and ESG disclosures. Our work spans sustainability, ESG KPIs, voluntary disclosures, regulatory reporting, and we also support assurance readiness assessments and looking at that from a product or value chain claim perspective. Across all of these areas, the objective remains the same, and that is to support organizations to build confidence in the information that they report, and in turn, providing stakeholders with assurance that the disclosures are supported by, of course, the appropriate evidence, governance, and controls. Brilliant. So we'll get started in terms of the context setting and the assurance landscape. And so that will cover how it's evolving, where expectations are gaining momentum. I've already said this, but at its core, sustainability assurance is about confidence in information. Whether the audience is investors, customers, regulators, or management teams, there remains the increasing expectation that sustainability disclosures are supported by robust evidence, clear methodologies, and effective controls. And that confidence creates value in several ways. It supports capital allocation and investment decisions. It also supports responses to stakeholder requests and expectations, as well as supporting to meet evolving regulatory requirements. So it's all about trust in sustainability information and thereby enhancing its usefulness in ongoing decision making. So moving on here to the landscape of frameworks. Obviously, this is not exhaustive. We'd love to put every framework under the sun, but we've pulled out the key ones here. And of course, despite these challenges across the sustainability landscape, there remains an increasing trend towards expansion of assurance and verification requirements. So we've shifted from what was a historic focus on the verification of emissions, and today we see widespread embedding across a much broader range of sustainability disclosures. So as I said, within this slide, we have indicated some of the key frameworks and their requirements in relation to emissions verification and overall assurance of disclosures. Now, ISSB is voluntary at the overarching level with IFRS S1 and S2, so it does not require assurance, although when adopted at a jurisdictional level, we see consideration of assurance as part of the regulatory framework. For example, Australia with the phased-in requirements, but then potentially some changes coming down the line after the recent budgetary discussions. Within the UK, the proposed adoption of ISSB, so that's the UK Sustainability Reporting Standards, currently doesn't include mandatory assurance requirement, although that may evolve and very likely evolve over time as the framework matures and is formally put in place. By contrast, when we look to the European Union, under CSRD, external assurance is built into the reporting regime. And of course, that covers the adjacent areas of the EU taxonomy disclosures. When we look to California, obviously, the US has had a challenging time in terms of disclosure and much uncertainty, but we still do have California's climate disclosure legislation in place. Of course, there's a number of legal challenges ongoing, but the initial rulemaking and expectation includes phased-in assurance requirements for the emissions reporting over time. And although not requiring assurance, any claim in relation to sustainability, etc., so say the anti-greenwashing regulations, they're naturally increasing scrutiny on those sustainability claims themselves. So even when formal assurance is not mandated. Now, alongside some of these key regulations, voluntary frameworks are also driving demand. We see that CDP encourages verification of environmental disclosures, and that's via a scoring uplift. And the recent release of the Science-Based Target Initiative's Net Zero V2 standard has incorporated the requirement for limited assurance for certain categories of emissions and base year data. And the goal of that is to support the acknowledgement of once a target is met, it truly has been met, and the data behind that is contributing to real economy decarbonisation. And taking one more step back, we have B Corp certification, and that includes independent verification as part of the overall certification progress. So while specific requirements differ, what we see here is that the broader shift to sustainability data is held at increasing level of rigor. So that's evident across all of these frameworks. Now, if we move on to some of the key standards within the verification and assurance ecosystem, at the measurement and reporting level, and I'm sure everyone will be very familiar with the Greenhouse Gas Protocol standard, and it provides the methodology for measuring and reporting greenhouse gas emissions. And then if we move on from an assurance perspective, those who have undergone an assurance engagement will be familiar very likely with the ISO 14064-3. And that standard establishes the requirements for verification and validation engagements and remains one of the most widely used frameworks for greenhouse gas assurance. The framework is further supported by ISO 14065, 14064, and they, of course, set individual and company level expectations on the requirements and who delivers the piece of work. So together, those standards establish confidence not only in the assurance process itself, but also in the capability and independence of those performing the engagement. Alongside the ISO suite of relevant standards, and of course, this is not exhaustive, there are many others, but we also have the IAASB assurance standards. So historically, we had ISAE 3000, and that provided the overarching framework for assurance engagements of non-financial information. And then we had 3410, which introduced more specific requirements for greenhouse gas statements. Both of those have been phased out, and the significant development here is that we have the ISA 5000. And that standard that establishes a global baseline for sustainability assurance. So rather than focusing on just one sustainability topic, it has been designed to support assurance across a broad range of sustainability disclosures and reporting frameworks. So overall, these standards provide the foundation for how information is measured, how assurance process is performed. And of course, the overarching piece is the end level of confidence that is established. So from here, I'm going to briefly dive into the two most key relevant frameworks. So the first one is the ISO 14064-3. As I said before, it remains one of the most widely recognized assurance frameworks for greenhouse gas verification engagements. And it provides the requirements, principles, and guidance for verifying and validating greenhouse gas statements. And it can be applied across organizational emissions inventories, project level emissions reductions, and increasingly we see that at a product level emission assessment. Now, importantly, the standard supports both verification of historical emissions data as well as validation of future projections or claims. And of course, this reflects the growing range of climate-related information being disclosed by organizations. It's also built around several assurance principles that will be familiar to anyone who has probably been involved within a financial audit or assurance. And these include independence, impartiality, professional judgment, skepticism, competence, materiality, and a risk-based approach to testing evidence. And many of these are the same concepts have now been carried forward into the broader sustainability assurance framework of the ISO 5000. And as I said, that's extending the assurance beyond just emissions reporting into wider sustainability disclosures. So the ISO 5000 was published last year. It's designed as a global baseline standard for sustainability assurance. And highlighted on this slide, it applies across a variety of sustainability reporting frameworks. So it's relevant for ISSB, CSRD, but broader ESG disclosures. And the goal of this is to create greater consistency in how assurance engagements are performed across jurisdictions and various reporting regimes. This standard also consolidates the previous assurance approaches that I mentioned earlier. And from an organizational perspective, one of the most important implications is that assurance is increasingly being approached in a way that is more aligned with the established financial assurance disciplines. So there's a greater emphasis on governance, risk assessment, evidence documentation, professional judgment, and transparent reporting in the end. I'm going to pause at this point and I'm going to hand to Victoria, who is going to cover some of the best practices of building trusted sustainability information and what an assurance engagement looks like in practice.
Perfect. Thank you, Helena. Exactly. Now we are looking more into how to build trusted sustainability information. One of the most common misconceptions about sustainability reporting is that it sits solely within the sustainability function. But in reality, reliable sustainability reporting is inherently cross-functional. So many of the companies now subject to increasing scrutiny rely on inputs from finance, from operations, procurement, risk, legal, internal audit, other functions within the company alongside the sustainability teams. And what we are increasingly seeing is that organizations with the strongest reporting outcomes establish clear ownership and accountability from the outset. Boards and executive teams provide oversight and challenge while management ensures sustainability considerations are embedded into existing business processes, controls, and decision-making structures. This becomes particularly important from an assurance perspective, because assurance providers are not only evaluating reporting metrics and disclosures, they are also seeking to understand the governance, controls, and processes that support the information being reported. So as reporting requirements mature, sustainability information is increasingly being managed with a level of rigor that is more closely aligned to financial reporting. Not quite there yet, but on the way to closer alignment. That requires clear accountability, effective oversight, and collaboration across the organization rather than reliance on a single sustainability function. And ultimately, strong governance provides a foundation for credible reporting effective assurance, and greater stakeholder confidence in the information being disclosed. Another area that becomes increasingly important as organizations prepare for assurance is establishing clarity around reporting boundaries, materiality, and methodologies. Many reporting challenges do not arise because data is unavailable, but because different parts of the organization have different interpretations of what should be included, how it should be measured, and what assumptions should be applied. From an assurance perspective, providers will typically look for consistency and transparencies in these decisions. That includes understanding which entities and activities sit within the reporting boundary, how material topics have been identified, which emission sources have been included, and the methodologies and assumptions used to calculate reported metrics. This is particularly relevant for areas such as Scope 3 emissions, where organizations often need to make judgments around data sources, estimation approaches, and materiality thresholds. What matters is not necessarily the absence of judgment. In fact, judgment is often unavoidable in sustainability reporting. The key is that those decisions are documented, evidence-based, and applied consistently over time. Ultimately, clear boundaries, robust materiality assessments, and transparent methodologies provide the foundation for reliable disclosure and a more efficient assurance process. Looking at technology, technology clearly has an important role to play in sustainability reporting, particularly as organizations manage increasing volumes of data across multiple functions, systems, and jurisdictions. However, from an assurance perspective, technology should be viewed as an enabler rather than a substitute for governance, accountability, and professional judgment. So, whether organizations are using ESG reporting platforms, workflow automation tools, dashboards, or more advanced analytics, the underlying principles remain the same. Data sources need to be clearly defined, methodologies consistently applied, controls appropriately documented, and supporting evidence readily accessible. We are, of course, as in every area, seeing growing interest in AI and advanced analytics to support data collection, anomaly detection, and forecasting. And these tools can undoubtedly improve efficiency, but they do not remove the need for review, for challenge, the human in the loop oversight. Ultimately, accountability for reported information remains with the company. And one of the most common assurance findings is not necessarily a technology issue, but a lack of clarity around how information moves through the system and how the calculations are performed and what supporting evidence and assumptions are retained. The organizations that are best positioned for assurance are typically those that combine technology with strong governance, transparent methodologies, and clear ownership of the reporting process. Ultimately, confidence in sustainability information comes not from the platform itself, but from the controls, evidence, and accountability that sits behind it. Putting assurance into practice. We already touched on the ISO 14643 as a key assurance standard for greenhouse gas reporting, but it's worth looking a little more closely at how the framework operates in practice. So at its core, the standard distinguishes between verification and validation. While in normal everyday language it's often used interchangeably, it's not the same thing, because verification focuses on historical information. So in other words, assessing whether reported greenhouse gas information is materially correct based on the evidence available. Typical example, the corporate organizational emissions inventories. Validation, by contrast, focuses on future-oriented information. So this involves assessing whether the assumptions and methodologies supporting future claims are reasonable. Example might include transition plans, net zero commitments. This standard is also recognizes two different levels of assurance: limited assurance, which provides a moderate level of confidence and typically relies more heavily on inquiry and analytical procedures. This is often reflected in assurance conclusions using language such as nothing has come to our attention, that this inventory is wrong, basically. Whereas reasonable assurance provides a higher level of confidence and requires more extensive testing and evidence gathering, resulting in a positive assurance conclusion similar to what many organizations are familiar with from financial audit. So from a practical perspective, understanding these distinctions is important because they influence not only the scope of the assurance engagement, but also the maturity of the process, controls, and evidence that organizations need to have in place. Ultimately, the higher the level of assurance sought, the greater the expectations around the quality, traceability, and robustness of the underlying information. Understanding the standards is important, but it's equally important to understand what an assurance engagement actually looks like in practice. So while the specific procedures will vary depending on the scope and level of assurance, most engagements follow a similar process that you can see here on the slide. Begins with scoping and planning, where the reporting requirements, organizational boundaries, and materiality considerations and assurance objectives are agreed. From there, assurance providers develop an understanding of the methodologies, assumptions, and controls that sit behind the reported information. This is often where areas requiring additional documentation or clarification first emerge. The core of the engagement is then focused on evidence gathering and testing. Assurance providers assess the risk of material misstatements, evaluate data sources, challenge assumptions and methodologies, test the calculations, and review supporting evidence to determine whether disclosures are supported and consistent with the applicable criteria. Any findings identified during this process are discussed with the company, allowing organizations to address issues, provide additional evidence, or refine disclosures where appropriate. The engagement then concludes with an independent technical review of the assurance process and the issuance of an assurance opinion. What is important to recognize is that assurance is not simply a review of the final report, it's an evaluation of the process, controls, methodologies, and evidence that underpin the information being disclosed. And this is why assurance readiness often begins well before the reporting cycle itself, through establishing the government's documentation and controls needed to support reliable disclosures. This slide brings together the areas assurance providers typically focus on when assessing sustainability information. The first one is reporting boundaries. Assurance providers will look at whether organizational and operational boundaries are clearly defined and consistently applied, including like the entities, any acquisitions, joint ventures, and Scope 3 categories. Inconsistent boundaries are one of the quickest ways to create any issues in the assurance process. The second is methodologies and assumptions. This includes calculation approaches, emissions factors, estimations, materiality judgments, and key assumptions. The expectation is not that every judgment disappears, but that judgments are documented, reasonable, and applied consistently. Third is data quality. Assurance will focus on completeness, accuracy, consistency, and timeliness of the underlying data. This is particularly important where organizations rely on multiple systems, estimates, or proxies. Fourth is governance and controls. Reliable sustainability information requires clear ownership, review processes, and internal controls. Fragmented accountability or informal review processes can create significant assurance challenges. Fifth is evidence and audit trails. Source data and supporting documentation and management approvals need to be traceable. Manual processes can still work, but they need to be controlled and supported by clear evidence. And finally, assurance providers will consider the disclosure and claims themselves. Sustainability information should be aligned with reporting criteria and presented in a balanced, supportable, and transparent way. Across the bottom of the slide, we have highlighted a few areas likely to attract increased scrutiny. So, for example, net zero commitments, transition plans, Scope 3 methodologies, carbon neutral claims, supplier data, value chain assumptions in the linkage between sustainability and financial reporting. So the key message is this. Assurance is ultimately about the quality, governance, and reliability of the information behind the disclosure, not simply the wording or the numbers in the final report. With this, I hand it over to Helena for the key takeaways.
Brilliant. Thank you so much. And hopefully we can have time for a couple of questions. But as we close, there's 5 key messages that we would encourage you to take away. And first, and I think we've covered it numerous times across this webinar, is that assurance is increasingly becoming a regulatory expectation, but also a market level expectation to signify quality and rigor of data. Second, trusted sustainability reporting depends on more than just the data alone. You need strong governance, clear accountability, effective controls, and they're all fundamental to producing information that stakeholders can then rely on. Third, if we consider reporting boundaries, materiality assessment, methodologies, they all matter. Many assurance challenges arise from not the final disclosure itself, but from missing clarity or consistency in the decisions behind that data. Fourth, high quality evidence and audit trails are critical, as you would expect. You need to be able to demonstrate not only what has been reported, but how conclusions were reached and how the information can be traced back to those underlying sources. And finally, assurance readiness is ultimately about anticipating risk. So the organizations that are best prepared are typically those that are identifying potential weaknesses early and strengthening the governance and controls over time. And of course, building in assurance considerations into the reporting processes from the outset, even if you're not formally obtaining assurance, but really think with your assurance hat on. We've got 2 minutes left. There's a couple of questions coming in, so maybe, hopefully we can get to a couple of them. Victoria, this is probably a good one for you. Do you always need to do a site visit as part of the greenhouse gas verification engagement? So I guess we're talking about ISO 14064-3 here.
Perfect. Yeah, happy to answer that one. You don't always have to conduct a site visit. There are like specific triggers within the standard if you should do it or not. I think it's up to the risk assessment the auditors will conduct. If a site visit will is necessary, how many are necessary, what type of sites. I think it really depends also on the industry, how mature is the greenhouse gas accounting within the company, have previously verification processes included, site visits. So all of those influence the decision for the auditors to conduct site visits. What is also, I think, increasingly happening, what we increasingly see are virtual site visits. Of course, they save costs and time on both sides and can be conducted in a virtual manner, which I think can be a very great solution depending on the company.
Brilliant. Thank you so much, Victoria. I'm looking at the time. We are at close. There's a couple more questions. I think there's some names on the question. If you submitted yours anonymously, you'd like us to get back to you after the webinar, do pop on your name. You can resubmit the question and we'll make sure we get the answer out to you. But thank you so much for your time today. I hope the discussion has brought you some practical insights as you prepare towards sustainability assurance. So thank you so much for joining us and your engagement. Do not hesitate to reach out. Our emails are on the slide. We're more than happy to continue the conversation. And thank you again for your time today.